G'day ladies and gentlemen, and welcome back to another Bitcoin update. I'm simply giving you guys an update today just to update you guys on the macro situation and the greatness we are seeing on the macro situation. Short term, medium term, it's all the same old as of the last few days. We've seen the breakout above the wedge formation. You guys are aware of that. We've been seeing increasing volume up until about yesterday of that breakout. We saw the target of the breakout reached. If we target the measured move from the wedge, we can retest, we can check to see what the measured move actually was. And we can see that from the first retest to the top of the wedge to the first retest to the bottom of the wedge, applying it to the breakout point, we can see that we targeted that 31.4K level. We reached that target precisely, and so the wedge's move is done. We are still waiting on a decision in the short term as to whether we need to correct downwards or whether we continue upwards. I've made myself very clear over the past day, in the last video specifically, that I think Bitcoin is probably due for a short-term correction down to the level around 28.6 or even 29K, something like that, before a move to the upside. We know that upwards trends generally form. Well, they have to form, right? Where you see, higher highs and higher lows. That's what upwards trend are. And so, when we see a breakout to the upside like we've seen, right, we need to form a higher low, come down, form a higher low, form a base, and then continue upwards. That's what we generally see with upwards trends and general breakout moves. We don't just see a move straight to the moon, without any stops in the way. We do correct downwards. Obviously, it's part of the market. And I think that at this point in time, given the fact that we've reached the target of the wedge, it probably would make sense to see a correction downwards to something like 28.6 or 29K. But that's what we covered yesterday, and you can check out yesterday's video if you want more on that. And we did cover as well yesterday, apologies for my throat, by the way, it's a little bit sore. We did cover as well yesterday that the critical kind of thing that everyone should be looking at right now, and specifically I'm looking at, is the monthly candle. We know that we saw a rejection from the monthly on the monthly chart at around that 29.3K level, that red line. We saw a rejection, we saw a bearish engulfing candle. Right now we're in the process of forming a potential bullish engulfing candle and actually jumping back above 29.3K, which would be very, very good, because the kind of entire downwards trend we've seen here, the entire bearishness we've seen that's come from, the price charts on Bitcoin has kind of stemmed from the monthly chart. The daily chart never really looked particularly bad. It was the monthly chart that kind of looked bad on Bitcoin. I think most analysts will agree with me on that. We saw a rejection from a horizontal level, and we saw a bearish engulfing candle, as well as a evening star candlestick formation, which is these three candles over here forming an evening star candlestick formation. It's a pattern of reversal. And so breaking above 29.3K and invalidating that bearish engulfing candle is very good. So we do need to be seeing a monthly candle close above 29.3K, at the very minimum above 27.2, which would get us back above the close of the last monthly candle and hence invalidate the bearish engulfing candle. But this is all old news now, and not necessarily old news, but it's all stuff we've covered before. And I do want to quickly recap the macro situation and get into some new stuff, or at least refreshing us on the stuff that's more relevant. Because ultimately we're waiting on the monthly chart, we're waiting on the monthly candle, we're waiting on waiting to see what's happening with the daily chart as well. We're waiting to see what's happening on the short term. This is all established stuff. We're just waiting here. There's nothing we can really do about it. Even short-term charts, if we're looking at 15-minute chart, there's no really clearly identifiable pattern. We're seeing multiple patterns form and break, and we saw a downtrending line over here. It broke to the upside. We saw immediately going into something like a descending channel formation over here, broke to the downside. We're seeing another kind of channel formation. I'm roughly drawing them up. Obviously, this isn't perfect. Another descending channel formation, something like that. That broke to the upside as well. It's just pattern after pattern after pattern, and none of which is giving any real clear direction. So there's not really much we can say about the short-term charts other than they look slightly bearish and they're probably correct downwards. Same with the daily chart. Monthly chart, we're still waiting. And so we can give you a brief kind of recap of what's happening on the macro charts. And the main thing I want to say is that the macro charts look very, very good. Not only is the monthly chart looking good 5 days into a monthly candle close, looking pretty confident there to close above 29.3 or at least 27.2. We're also seeing that monthly, speaking of a different kind of version of the monthly chart, the RSI on the monthly chart, and it's RSI bullish crosses between the 14 moving average, the yellow line. We've got these this chart down the bottom here on the RSI. We've got green circles and red circles. You can see the RSI moves up up and down and crosses between that yellow line there on the RSI. That's the 14 moving average. And right now we've seen a bullish cross, and that's only happened a few months ago here. And, historically, bullish crosses have led to massive moves to the upside. These green zones are after bullish crosses. The red zones are after bearish crosses. You can see that these crosses are very, very historically prevalent. When they do occur, there's dramatic moves to the upside of a downside. There's very, very, there's no room for error, really. I mean, it's only been nothing but accurate. We've seen 507% gain, 5,700% gain, 228% gain, 550% gain. When we've seen the bearish crosses, we've seen an 80% loss and a 40% loss. These are big moves that have been accurately predicted by the monthly chart and the monthly RSIs, bearish and bullish crosses. We've seen a bullish cross, and it's only happened very recently. And we've seen the start of that move to the upside, around 40% gain, and we've got every reason to believe, as per the macro, that this move will continue the upside. And you might think, well, what are those reasons? Well, obviously we've got 4-year cycle. That's a no-brainer. We've also got Gaussian channel. Gaussian channel on the weekly chart is something that's very, very, very important for Bitcoin. We've never, ever seen the trend we have of the Gaussian channel fail. The trend is, once we enter the Gaussian channel, we generally move through it, right? So if we enter it from the upside, we move through to the downside, and so on. If we enter it from downside, we move through to the upside. This has never ever failed, and guess what, guys? We've entered it from a downside, and we should move through it to the upside, and we're just doing that right now. We've got 6 hours until the weekly candle close, and we're just doing that right now, moving through it to the upside as planned, just like the trend, and that's a trend that's lasted throughout the entire lifespan of Bitcoin. And it doesn't just move through to the upside a little bit, guys. It moves through and follows through and sees a big move. And so, for all of the reasons, for the whole trend, what it suggests is that we should be moving through it significantly over the coming months and actually moving upwards further on Bitcoin. And this is further supported by establishing trends we have on the macro chart. In regards to Bitcoin between the halving and the bottom. We have the last 2 cycles seeing a 300% gain, 370% gain from the bottom to the halving. We saw a 340% gain from the bottom to the halving at the peak, I should say, in 2018. And if we're going to follow a trend like that, we could be seeing a 340% gain from the bottom to the halving, in which case we go upwards to around 60k. Worst case scenario, that trend breaks. It's not a trend yet; it's establishing trend. Worst case scenario, that trend doesn't fully establish, and even in the worst case scenario, the backup trend is we see 1,100 days between top and a break of that all-time high, and in which case we'd reach a new all-time high around November 2024. So in the worst case scenario, we reach an all-time high in November 2024. In the best case scenario, we reach an all-time high as early as April 2024, around the halving or just a bit after the halving. So, macro charts look very, very good, and I can bring up a 4-year cycle chart, and I can bring up a dozen more macro charts that look very good. And of course, I could also bring up a couple ones that look bad as well. But ultimately, I think the good outweighs the bad tenfold at this point in time. And the reason I can say that so confidently, I can say that's objectively true, to be honest with you, is because the good is the cyclical theory. The good relies on the cyclical theory. The bad relies on very, very speculative, nothing but rumors, really, in regards to traditional markets. And, none of that's supported. Correlations shift all the time. It's very, very, it's not as convincing as people think it is. I've spoken about this so much in the past. I don't want to get into it too much again, just because it's becoming so repetitive at this point. But we know for a fact that Bitcoin doesn't exactly follow the S&P 500 or the NASDAQ now. We know that's not the case. And it's only ever been the case, guys, since 2020. People need to understand this. Bitcoin only started following the S&P 500 and the NASDAQ when quantitative easing began. This is because a massive amount of money was pumped into the markets. And so, of course, Bitcoin is going to pump with traditional markets because everything is pumping. Everything is pumping. As soon as QT started, the correlation between Bitcoin and the S&P and the NASDAQ it started decreasing. It's been decreasing ever since. It's a very excuse me, there's a very solid argument to be made that the only reason Bitcoin ever correlated to traditional markets to begin with on any meaningful scale is because of quantitative easing. And now that quantitative easing is not here anymore, there's a very strong argument to be made that Bitcoin won't follow it again until the next round of quantitative easing. So I think that we need to rely on the Bitcoin charts, and the Bitcoin charts are very clear. Another one is Bitcoin dominance. Bitcoin dominance moves upwards during the bear market. This is because people flock People flock to Bitcoin in the bear market. They seek security. Altcoins aren't secure. Altcoins generally die during the bear market. They fail to gain traction again during the bull market. They die during the bear market. And so, of course, just like usual, just like in the last cycle, we're seeing Bitcoin dominance start to rise, and that's been happening since the bottom. All the macro charts look very good. All the macro charts are on schedule, on track, and just doing what they've always done. And we're just waiting on short term, waiting on the daily chart and the short term charts, see whether we see a correction or not. I think we probably will, from down to 28.6k to 29k. That's probably where we're looking at if we had to be logical about it. And obviously, if we break to the upside above 31.4, then obviously, that's not going to happen most likely, because that's going to be a further higher high from that point. That's going to be breaking the previous high made at the top of the wedge. So I think we'll probably correct downwards a bit more, but really there's not much I can say about it, and I can't really be too decisive about it, because it's not exactly like we're seeing bearish charts form in the short term either. It's just kind of speculative at this point. But I can be confident of the fact that based on all the macro trends we have, Bitcoin's in a very good position, and I think I'll end the video there. So just a recap video, just refreshing your minds of what the macro charts look like, and giving you a brief idea of what's potentially likely on the short-term charts as well. So we'll just have to wait for things to play out now. There's really not too much to discuss in the market other than that. Guys, check out the Bitget exchange, 5 times lower fees than Binance. I know there's been some controversy with Binance and Coinbase. It's time to get an exchange where there's no controversy. That's Bitget. 5 times lower fees than Binance, 15% trading fee discount on exclusive reward center if you sign up using my referral link. Get onto it. The link is in the description below. Referral link in the description, pin comment below. Then we've got Crypto Academy, guys. You want to learn how to trade? This is the place you can do it. The website link is in the description. You can find out all the information about the course on the website and email us here on the website email address, which is cryptoacademycourses@gmail.com. And then finally, guys, the VIP group. We trade altcoins 3 to 5 times a week on the VIP group there on Telegram. You can check out the information group for free. It is a Telegram group giving you the information for the VIP group, as well as the previous trading results, the track record. All of that information is free. Check that out. The group is below. Again, all those links, Bitget, Crypto Academy, VIP, it's all in the description below. Check it all out. Thanks, guys, for watching. Hope you enjoyed, and I'll catch you in the next one.